Good morning. It's very exciting to be here in Paris for a very momentous week. Obviously, it's Paris Blockchain Week, and we have this kind of emerging hub of crypto innovation in France, which we'll have more to say about in terms of Circle strategy as well throughout the day and week. I think what's exciting about these kinds of forums is bringing together, or as we like to say, converging business leaders, policy leaders, government officials, broader civil society, and bringing that together, and as well as the broader crypto ecosystem, bringing those many communities together to explore how this technology is changing society and how we can work together to drive that. So we have an exciting day ahead of great discussions. We're going to be sharing some news. We're going to be showcasing some things as well. And of course, we have an exciting night ahead, which hopefully all of you are joining us for. I thought to sort of start this discussion, I would talk a little bit about Circle's mission. Circle, it's actually our 10th anniversary. We founded the company 10 years ago. And that's a long time in this industry. And what we envisioned in that time 10 years ago was this idea that we could take what we think of as traditional money, fiat money, and we could express it in a digital currency form, and that we could make that available through open protocols on the internet in the same way that we have open protocols for moving data and information and communications. And that if we could achieve that on top of these emerging public networks, these blockchain networks, if we could achieve that, we could really bring the cost of moving value to zero. We could embrace the idea of programmable money, which was really an idea on napkins, smart contracts back then. And by putting those together, we could really fundamentally restructure the way that the financial ecosystem worked, the way that commerce worked globally. And we thought that that was quite possible. And today, the company's mission is to increase global economic prosperity through the frictionless exchange of value. And that has been our mission for 10 years. And we keep getting closer and closer to realizing that every year. So 10 years in, we're at a pivotal time for this industry, for Circle, in the broader economic and financial system backdrop, if you haven't been reading the news. What I wanted to do is talk about where are we now? Where are we in terms of the development of this technology? Where is the financial system right now? And what impact is that having on our industry and on the broader world? And then what can we do about it? What are the policies that need to be put in place? What are the regulatory frameworks that need to be put in place to deal with the diverse kinds of issues that we have? So, starting a little bit with technology. After 10 years, when we imagined what would become possible, it's totally possible today. And we're seeing breakthroughs across the board. The technology ecosystem in crypto is more vibrant than it's ever been. We can talk about a number of breakthroughs. Breakthroughs in proof of stake layer 1 blockchains, allowing for energy efficient, decentralized compute and transactional infrastructure. We're seeing scaling models, the emergence of very scalable layer 2s on these blockchains. We're now in a place where blockchain infrastructure can support thousands to tens of thousands of transactions per second with costs that are around a penny or 2 cents, in some cases a fraction of a cent. That is like the broadband of this space coming online, which is extraordinary because that is what is necessary to be able to support the scale of use that we need. The underlying infrastructure, the crypto infrastructure, the custody infrastructure, the security infrastructure, the tooling for developers is moving at an incredible pace. The number of infrastructure and tooling products and services and companies in this ecosystem is stronger than it's ever been. And so people who want to build serious applications and build serious financial services can do that today. We're seeing breakthroughs in the technology that can make this usable and safe for the average person. Account abstraction, which I won't get into too much detail on, is a new layer on the Ethereum ecosystem and across the whole Ethereum ecosystem that is going to make it possible for people to safely control their funds without needing to memorize seed phrases and manage private keys. It'll make getting involved in transacting with this not require you to have to purchase something like Ethereum in order to make a payment. It'll be gasless transactions and a user experience that is much more like downloading WhatsApp and sending your first message. And so that is immediately in front of us in terms of the safety and usability of this technology. And then technologies like zero knowledge proofs and NFTs allow us to weave into this identity, credentials, privacy, and security. These are fundamental needs for mainstream utility. So all of these technologies are moving at an incredible pace right now. And the development energy on them is significant. And the products we're going to see emerge, and many products from Circle, which we'll be excited to highlight some today, but the products that are going to emerge here are exactly the pieces that are needed for this to scale to 1 billion users. And I think we're going to see that happen in the next 24 months. We're very, very close. It reminds me of when broadband came online in 2002 and 2003. Everyone thought the internet was dead. You couldn't do anything of it. It was a bad experience. It was a failed effort. But actually, the infrastructure was coming online at an extraordinary pace. So where are we now in terms of the financial system? Crypto emerged as a reaction to the 2008 financial crisis. Crypto emerged around this idea of sound money, this idea of full reserve money that could avoid some of the inherent risks with fractional reserve money that had plagued the financial system in booms and busts, over decades. It was also a desire to build a foundation for the financial system based on this public infrastructure, these public goods, public blockchains, where you could see with transparency what was happening, where you could have auditability of what's happening, where you could see the risks and track them more closely. And you could do all of that on a more efficient infrastructure. So the reaction was, what are the right foundational elements to build a safer, more inclusive, more efficient global financial system? That's what's brought every one of the startups I've met, every founder I've met into this industry is realizing those goals. And we have seen today, again, the limitations of this fractional reserve banking system. The collapse of Silicon Valley Bank, the collapse of Credit Suisse, the collapse of First Republic Bank, and a backstop being put in place by central banks around the world as we speak because of all of the inherent risk that is embedded in fractional reserve banks today. Once again, governments are stepping in to try and avoid another financial crisis, which may have already begun. This is the financial system we're in today, and this is the world over 10 years ago that crypto emerged to respond to. So where are we now in terms of USDC as a digital dollar? As one of my colleagues likes to say, since launching USDC 5 years ago, we have been in a race to the top in terms of our reserves and our transparency. We have always sought to hold ourselves to the highest standards possible, the highest regulatory regime possible, the highest levels of transparency, and the highest quality of a reserving model. And we've made enormous progress on that over the past 6 months and even over the past 2 weeks. And it relates to this issue that we're seeing, the risks embedded in the financial system that are the result of the structure of banking today. So the first is, and not everyone has paid close attention, is we built a strategic partnership with BlackRock. And we built something called the Circle Reserve Fund, which holds approximately 80% of the reserves of USDC. Those are held in an SEC registered and supervised structure with an independent board and independent audit. And under the ticker USDXX, if you Google that, you can see every day, every single serial number of every single bond, which are all the short-term T-bills that are held, the safest instruments in the world, with total transparency and a regulatory wrapper around it. We put that in place, and we built that also in partnership with the largest custodian in the world, Bank of New York Mellon, a $24 trillion custodian. So that is part of increasing transparency and up-leveling of safety and soundness. We also began to move towards the cash part of USDC into stronger banking infrastructure. And we're in the process of doing that as we started to see banks around us collapsing. And I'm very, very pleased to say that as of last week, the cash that backs USDC is with one of the largest global systemically important banks in the world, one of the lowest credit risk and safest cash instruments in the world. So today, literally, USDC is the safest digital dollar on the internet, period. There is not another digital dollar on the internet that has the same underlying safety and soundness characteristics. But we have to go much further. And this relates to thinking about where we're at with the financial system today. We need to de-risk further. We have been advocating for years for policies that would allow for a full reserve digital currency bank in the United States, a full reserve digital fiat bank that would allow digital currency to be issued, such as USDC, with a full reserve foundation, but with the infrastructure and transparency of public blockchains. Our goal has been stated for years that we want USDC to be backed by government obligation money exclusively, where possible, with the openness and interoperability and innovation of blockchains around it. And here, our principle has been that a full reserve banking system where the reserves are the safest instruments in the world should be the foundation of payment systems. It should be the foundation for money in movement, money in transit. The base layer of money on the internet needs to be based on something that does not have embedded risk-taking in it. And that separation of payment systems from lending and risk-taking is so fundamental. And that's something that economists have thought about since the 1930s and the Great Depression, and has constantly been revisited, and we need to revisit it today. And there is a chance, with the right policies around stablecoins, to actually build a more sound foundation for money. So what do we do about this? What are the policy implications? Just to put this in perspective, 2 years ago, the biggest governments of the world, with their leading regulatory, the leaders of their regulatory and policymaking community, put forward, this is the Financial Stability Board of the G20, put forward a set of policy recommendations for how to regulate stablecoins. 1.5 years ago, the top regulatory leaders of the United States, the Federal Reserve, the US Treasury, and others, issued a report that asked Congress to urgently act to pass stablecoin policies because there would be run risks and other risks if that was not the case. We subsequently saw Luna collapse. We subsequently have seen commercial banks collapse that are not ultimately the right foundation for risk. But around the world, we've seen stablecoin policies emerging from banking and payments supervisors, prudential supervisors, and they're moving on this. This is now happening in every major market. Stablecoin regulation is coming. It's coming here in Europe first. It's coming to other markets very fast in 2023, 2024, and it can't come soon enough. What the US government likes to refer to as payment stablecoins, which are stablecoins designed to be a medium of exchange, designed to provide a hyper-efficient internet-native payment infrastructure, are the foundational pieces of this. With this kind of legislation, you can see an issuer like Circle be able to be supervised by the Federal Reserve, be able to hold cash outside of the commercial banking system, but with the Federal Reserve and in T-bills, and have the safest foundation for money that we need. So a safer, more sound foundation of the entire financial system can be built for this emerging kind of internet age. So where do we go as we see these things come together? We're seeing a convergence of policy, of technology, and of user experience from innovative companies that are building on the rapid growth in this technology that I believe are going to deliver the next phase of growth for the entire internet economy, where value exchange happens at the speed and efficiency of the internet, and where the other building blocks of finance are moving to this infrastructure as well. Credit intermediation, FX, exchange, other building block primitives of the financial system are all moving into smart contracts and automated machines on these networks. Even the markets for capital, the way in which risk is adjudicated and people can invest and people can effectively borrow, those markets for capital are nascently moving into an on-chain infrastructure. And if we have at a base layer these highly stable digital currency units, such as payment stablecoins, and we move these kinds of financial building blocks onto blockchains, we can have a safer, more transparent financial system than we have in our opaque, risk-based financial system of today. So coming back to kind of Circle's mission to raise global economic prosperity through the frictionless exchange of value. When I started the company with my co-founder, we used to say, this is going to take a long time. So back in 2013, it was a very different universe compared to today, but it was going to take a long time. We thought it would take like 20 years to execute on the ideas that we have. So we're 10 years in, and in many ways, we're just now realizing what I call the 1.0 of what we envisioned would be possible, which is amazing. We're just bringing online right now, as a community, the developers at scale and the ecosystem at scale to build this out in every country around the world. And we're just now forging deep and durable collaborations that are needed with governments, collaborations with governments around the world to bring trust and transparency that's necessary for mass adoption. That is happening. And I want to kind of end with what I think is an optimistic note, which is that when you look at the environment and you look at the way things are talked about in the media and in industry, there's a lot of us versus them. This is banks versus crypto. This is government versus industry. This is government versus individual sovereignty, or industry versus individual sovereignty. There's a lot of us versus them. It's very polarizing, and that's a problem. What we have in front of us in the financial system as a whole, in the development of this technology, in the building of the rules that are needed, the appropriate kind of rules that are needed to make this work at scale, these are really hard problems that we're facing. They're very hard problems, and we need to solve them. We need personhood, we need integrity, we need conviction to work through them. And I think if we all commit to that, whether you're in government or you're in industry or you're an individual or you're a developer, if you commit to that, then on the other side of it, I'm very confident that we can realize that vision of a safer, more inclusive, and effective economic system. Thank you.